Hey, what's up, Skyview? It's Christos, and it is May 1st, 2017. We're just looking to add another trade to our portfolio. We're just around that sweet spot of expiration. We have 46 days left in that June cycle, so we will definitely try to be ramping up our trade count this week. If we go over to our position statement right now, you can see not bad. It's a decent count, but we'd like to get another 3 to 5 trades on this week. That'd be nice, and then kind of continue that into next week. So if we just take a look at this ETF watch list, just because a lot of these stocks are still in earnings season, we can see we're in a lot of these. We're in an FXE position, we have an XRT position, EFA we don't have XLK, we have KRE, we have XOP, we don't have EWZ or SLV, we have TLT. So we do have a lot of these, and then IVR kind of starts to drop off here, and it is pretty much like any other underlying in the market at this point. A lot of these stocks still have earnings. One thing I did notice is that we don't have a position in SPY, in the almighty SPY. And I always start off with the SPY up here. So even though IVR is not exactly too sexy in here, we can still construct a trade, and maybe construct a trade with minimal downside risk, with no downside risk. We kind of like to do these SPY trades sometimes with no downside risks, and that is kind of cool. So why don't we just go ahead into the Analyze tab and see what we can construct with the SPY pretty much at all-time highs here, kind of looking like it wants to push to yet another all-time high as it's been doing. But with IVR so low, it's not only worth trading small, but maybe trading in a way where we don't have any downside risk or little downside risk. So let's just go to the option chain for SPY and see what we got here. And we will be going to the June monthly cycle with 46 days until expiration left. And we can just kind of scroll down here towards the at the money strikes, and here we are. So I usually like to start off shorting the 30 delta, around the 30 delta. So that brings us to this 242, 243, 244 area, I guess. And why don't we try and go with a little bit more aggressiveness on this side, since we won't have any downside risk, and we'll go ahead and short this 32 delta for $1.44. And we've been going 4 points wide lately, just as another way to trade a little bit smaller in this low IV environment. We usually do those 5-point wide spreads, but trading 4 points or 3 points wide is also just another way to trade a little bit smaller. So why don't we stay consistent with that 4-point wide spread and go 4 points wide? That takes us to 246 here, and that is around the 13 delta. So we'll just go ahead and buy that one. And maybe we can construct a trade, let's just see, with no downside risk. So we'll just maybe short the at the money put, and then just go 1 point wide, and that'll make it so we do not have any downside risk. And we'll see what we're collecting for a credit on that. $1.39, not bad at all. Well, let's first just take a look at the strikes here. I'll move this up a little bit more. So this is actually kind of a large credit too. So what we could even do is, because we were kind of aggressive on that call side, I'm thinking maybe just push it back a little bit more. So we have the 242, 246 right now. Maybe we can do the 243, 247. This 243 is around the 26 delta, and that 247 takes us to the 10 delta on the call side. So because of this larger credit here, especially on a 4-point wide spread, I think we have a little bit more room to kind of push this down, or push this up actually. Push the call side up. So let's see what kind of credit we would get if we just push the call side up. About $1.16 on a 4-point wide spread on the upside. So I kind of like that. We're short the 243 and the 238, but remember we have no downside risk because we are only 1 point wide on our put side. And if we go over to our risk profile, we shall see this isn't what we want. There it is. So maybe we can stretch this out a little bit too to make it seem a little bit more visual. I'm personally a fan of the black backgrounds. I think it makes it look a lot more visible on a black background, but that's just me. Anyways, you can see right here we have no downside risk to the trade. SPY could go all the way to 0 and we would still make that 16 bucks on expiration day. And then our risk to the upside is just the credit received, or actually the spread with less the credit received. So that $4 wide spread less $1.16 in credit takes us to a 284 loss on the upside. Now, if we just set our slice to break even, we can get a number. And what I like about these skewed iron condors is that you only have one break even, and it's real easy to calculate your probability of profit. If that's the case, we can see our break even is at around 244.18 if we were to place this trade. So if we just go back to our option prices and we find the strike price closest to 244.18, it would be this 244 one. We can see it's at the 21 delta, which means that it has around a 79% probability of expiring worthless. And if this 244 strike expires worthless, then we will not lose a penny on this trade. So that means we have about a 79% probability of profit on this trade. And remember, we have no downside risk, right? No downside risk on this trade. So short the 243 and short the 238 if we want to just go to the chart and throw in some price slices, and I'll have a little pop-up that tells you you can skip this point if you'd like and where to go. So we'll just try to do this as quick as possible. We have the 243 on the upside. I'll do some slamming on the keyboard here. And then 4 points wide from that 243 is the 247, somewhere up there. And we'll just edit the properties quickly. Oof, so close. 8 cents away. 247. And we'll make that a different style. And then on the downside, it was the 238. So it's a very tight one, right? But we're basically just betting that SPY stays in this tight range, and if it does go ahead and start accelerating to the downside, then it's no big deal because we cannot lose any money to the downside. So we're pretty much betting against a big upside move. 238 and then 237 right below it. But remember, there's no downside risk, so I'm actually not even going to put that price slice in. Basically, anything above this will be our max loss, and we have no downside risk on this trade. And the reason we constructed it like this is it's just another way to kind of defend, if you want to call it defending. It's just another way to defend against these low volatility environments. Is just structure a trade that either has negative deltas or that has no downside risk. That way, if the market does start selling off and IVR does start increasing, it's not exactly hurting our short premium position that we have here in SPY. So I kind of like this. Let's go back to our Analyze tab and probably look to route this order. Now, SPY is a pretty liquid underlying, one of the most liquid underlyings out there. So let's see what the spread width is. It's usually a couple cents, 2 or 3 cents or so. And 115 to 118. So let's go in right at the mid price. Oop, and it just changed to 117, but that's okay. See if we get a fill. I'll have my volume on as well. And no fill. So let's go ahead and check it out in our working orders here. And see what we are working with. It looks like it just down ticked on us when we were placing the order. So let's see what this new spread is at. We'll cancel, replace that one, 114 to 117. We're in at 117. Let's just move it down 1 cent closer to the NAT price at 116. Hopefully we got a fill here. And it does not look like it. So we'll go back to the monitor tab, and looks like the mid price at 118 now. So it's kind of moving in our direction if we want the fill. Let's check out the spread again by cancel replacing the order. Still not filling us at 116. Might have to go down to the NAT price for a fill this time. Let's go ahead and try to get a fill. 115. Ooh. Looked like we were just at the natural price. We are now, but we're in at 116, not at 115. So let's go ahead and at 115, see if we can get a fill here. Should be able to. Nothing, huh? Close, but no cigar. So maybe we'll just try to sit here for a minute and see if we are filled. Just take a look at the SPY to occupy our time. Today, up 0.3%. We have big moves in some of the NASDAQ stocks like Facebook, Apple, Netflix, all up over 1%. You see Facebook here up 1.38%. Let's check out Apple, 1.78%. And let's check out the almighty Netflix that seems to be running this rally, up 3.22%. So just a lot of big moves in these stocks. Anything over 1% is a pretty big move. And there is our SPY position that just got filled at 115. So anyways, a lot of big moves in the market. The SPY only up 0.3%, even with all those big moves. But all those stocks are NASDAQ stocks, and the NASDAQ is up a little bit higher. Looks like I'm getting some freezing going on my computer here. There we go. So anyways, a few of those NASDAQ stocks just kind of propelling the market a little bit higher today. We were just filled on our SPY positions, so we have another position, and we will look to be adding a few more as the week progresses here, so we can kind of bulk up our trade count in this 45 DTE window. So that's about it, guys. Not much else to say. Pretty boring trade in SPY, but boring is good. All our trades are boring. We just trade a very boring and simple approach just because that is what seems to work for us, and it also makes us comfortable. And we have to remember, we have to find ways to feel comfortable as traders, because we're going to be doing this into longevity, and we need to feel comfortable every day, every week, every month when we're kind of stepping onto our platforms. I always joke in the chat room and say how traders are always complaining, and in a way we kind of are always complaining, but that's just because we're at the mercy of the market at all times. And despite us always complaining, you know, our P&L stays in the green yield to date, and we just kind of have to take what the market gives us and understand that the good times need the bad times in order to be good times. So we need both good and bad times, and that's what we get, and we don't get to choose when they come. Anyways, guys, that's about it. Again, here is kind of the range we're playing, a very tight range in the SPY. Even if it does go up a little bit higher, we will be fine. And if it does drop, we can't lose a penny. So we're basically just betting that SPY kind of meanders in this range for a little while. And we're really only scared of the upside because that is where our risk is. Well, that's about it, guys. I hope you learned something from this. Thank you for listening, and until the next video, take care.